All right, if you're a trend trader, you know this pain. You spot the absolute perfect setup, you jump in, and then poof, it just dies on the vine. Well, today, we're going to put a stop to that. You know exactly what I'm talking about, right? You see that gorgeous moving average crossover, prices pushing new highs, everything is lining up. So you take the trade, you're feeling good, and then bam, it immediately reverses and whipsaws you out for another one of those soul-crushing little losses. It's enough to make you want to throw your keyboard out the window. But what if I told you the problem isn't your entry? What if it's not you at all? See, the real villain here is something we call the market regime. Trying to trade a trend when the market is just chopping sideways, well, it's like trying to sail a boat when there's absolutely no wind. It's just not going to work. But today, I'm giving you a tool that's kind of like a trend strength thermometer, one that tells you exactly when the wind is finally picking up. Okay, so here's the game plan. We're going to dive deep into this whipsaw problem. Then I'll introduce you to your new best friend, the ADX indicator, our trend thermometer. After that, we'll pull back the curtain and see how professional traders use this thing. Then, the best part, I'm going to give you a full actionable strategy you can use. And finally, we'll wrap up by covering the 5 biggest traps people fall into so you can avoid them from day one. So let's get right into it. What is this trend thermometer I keep talking about? Well, it's called the ADX, and it's about to become the hero of our trading story. Its whole job is to solve this one massive, frustrating problem. So, ADX stands for the Average Directional Index. It was developed by an absolute legend in technical analysis, a guy named J. Wells Wilder. Now listen closely, because this is the most important part. The ADX measures the strength of a trend. That's it. It does not tell you if the trend is up or down. A low ADX means a weak, sleepy, sideways market. A rising ADX, on the other hand, means the trend is waking up and gaining power. And this, right here, is where almost everyone gets it wrong. They see the ADX line going up and they think, oh, it's a buy signal. No, no, no. The ADX is your strength meter. That's all. To figure out which way the trend is going, we look at its 2 little buddies, the plus DI line and the minus DI line. Think of it like this. ADX tells you if there's a party. The DI lines tell you if it's a bull party or a bear party. And figuring out the direction is super simple. If the positive DI line, that's the green one usually, is on top of the negative DI line, the bulls are in charge. If the negative DI line crosses over and gets on top, well, the bears are running the show. That's it. Strength from ADX, direction from the DI lines. Now, I want you to know this isn't just some random indicator that people mess around with. The ADX is a serious tool used by professional and systematic traders. And why? Because it helps them answer the most important question in trading. When should I just sit on my hands and do nothing? Just look at this quote from the amazing trader Linda Bradford Rashke. She talks about a setup she famously called the Holy Grail. But notice what she says. She doesn't use ADX to get into a trade. She uses it as a filter. She literally waits for the ADX to tell her that a strong trend is in play before she even bothers to look for her entry. That is a pro-level move. Okay, so let's take that pro-level idea of using ADX as a filter and build a complete trading system around it. We're going to put all the pieces together into something I call the ADX Trend Filter Pullback System. It's simple, it's logical, and you can start looking for it right away. First things first, we need to map out our environment. If you see the ADX indicator hanging out below 20, that's what I call the chop zone. This is where trend strategies go to die. The market has no energy, no direction. This is a big red light. Stay away. But when the ADX starts to wake up and pushes above 25, well, that's our green light. We are now officially in the trend zone. This is the indicator telling us, hey, the conditions are right. A real trend might be forming here. This is when we start paying attention and hunting for our entry. Now, what happens when ADX goes absolutely vertical and screams past 50? This is the extreme zone. Yeah, it means the trend is incredibly powerful, but it's also a huge warning sign. It could mean the trend is getting exhausted and might be late in the game. Chasing a new trade up here is like jumping on a train just as it's pulling into the final station. You're probably too late. So here is the full playbook for a long trade. Step 1, our main trend filter. Price has to be above a rising 50 EMA. Simple. Step 2, our strength filter. The ADX is above 25 and ideally it's pointing up. Step 3, a quick direction check. Make sure the plus DI is above the minus DI. Once those 3 conditions are met, we don't just jump in. We wait. We wait patiently for price to pull back to the 20 EMA. And when it gets there, we look for a trigger, like a nice bullish candle, to enter. Our stop loss? That goes right below the low of that little pullback.
Of course, you need an exit plan too, and you've got options depending on your style. You could take some profits off the table when you're up one time your risk and then trail your stop. Or you could simply exit if the price closes back below that 50 EMA we used to get in. Another great option is to watch the ADX itself. When it starts to roll over and lose steam, that could be your signal that the trend is fading.
Oh, and here's a quick bonus for you. If you're a fan of moving average crossover strategies, you can upgrade them instantly with this. Just add one rule. Only take a buy or sell signal from your crossover if the ADX is above 25. That one little filter can save you from so many false signals in those choppy markets. It's a game changer. All right, knowing how to use a tool is great, but you know what separates the pros from everyone else? Knowing what not to do. So let's cover the 5 most common traps that traders fall into when they start using the ADX. Let's run through these so you don't make these mistakes. Number 1, the big one, confusing strength with direction. Say it with me. ADX is strength only. It's your speedometer, not your GPS. Number 2, treating those levels, 20, 25, 50, like they're magic numbers. They're not. They're guidelines. Some markets might need a 22 or a 28. Test it for yourself. Number 3, buying just because ADX is really high. Remember, a super high ADX often means the move is mature, not that it's a good time to get in. We buy pullbacks, we don't chase peaks. 4, trying to trade ADX all by itself. It's a filter, not a full system. You still need your entry, your stop, and your exit plan. And finally, number 5, using it on really low time frames without any other confirmation. It can get really noisy down there. So either add more filters or just zoom out to a slightly higher time frame. So here's the bottom line. ADX is not a magic bullet, but it is an unbelievably powerful filter that helps you understand the market's personality. It keeps you from trying to force trend trades when there's simply no trend to trade. Now, if you want to see this exact strategy in action on real live charts where I break it down candle by candle, just let me know. Drop a comment below with the market you trade, whether it's crypto, forex, or stocks, and I'll put together a detailed walkthrough.